Good afternoon to all of you. I'm Stefan Schneider, the owner of the German M&A Review magazine. On behalf of M&A Review Europe, which is a joint initiative of the French-speaking M&A magazine Fusion Acquisition and the German-speaking magazine M&A Review, I would like to welcome all of you to the 6th webinar of the webinar series Insurance and M&A Transactions. Since environmental aspects play an increasingly important role in corporate transactions, we welcome our speakers from Marsh, both speakers experts in this field. And Marius is the first expert here on the picture on the left-hand side. Marius joined Marsh in 2013 and works as project manager in the business unit Private Equity and M&A. He holds a master degree in finance from the International School of Management, Frankfurt. To the right-hand side, you can see Dr. Christoph Möcklinghoff. He holds a doctorate in chemical engineering and worked as a technical and environmental director in the industry. Since joining Marsh in 2001, he builds up environmental specialists covering Continental Europe, including liability transfer and complex transactions. So please, Marius, the session is yours.
Yeah, thank you very much, Stefan, for the introduction. Christoph and I look forward to presenting the possibilities of insuring environmental risks during M&A transactions. So once we look at the recent webinars which were presented in the course of this series, I would say that this topic is somehow special, as the insurance product that deals with environmental exposures is I would say, kind of special standalone policy and therefore differentiates from the traditional W&I insurance or other M&A linked insurance products that are in the nature of W&I insurance. So therefore, the intention of this presentation is to explain everything surrounding environmental exposures in general, its particular relevance in M&A transactions, and as a solution, explain everything around pollution, legal liability insurance, how it works, what it covers, what is required for placement process, etc. And yeah, we hope to bring this closer to you in the next approximately 45 minutes. One last comment before we start. In case you have any immediate questions, please feel free to press the hand raising button. I think you will be unmuted then. Or otherwise, we have also planned to have some minutes at the end of this 1 hour session in terms of raising questions. So here you see a brief agenda showing that we have structured this presentation into 5 sections. Obviously, we start with a quick introduction, followed by an explanation of environmental risks. Considering that we have people attending with slightly different backgrounds and different levels of knowledge in that regard, we will start under section 2 with explanations surrounding environmental risks without specific consideration of an insurance product, but focusing on environmental risks in general, kind of in order to comprehensively understand the actual risk before the need of a respective insurance product becomes apparent. In section 3, we show why environmental risks are of particular importance in transactions, and leading us to section 4, where we explain everything about the actual insurance product that is used to cover historical pollution conditions in the course of M&A transactions. And at the end, we're going to have a quick summary before we're going to have a dialogue on certain queries. In this regard, maybe one quick comment referring to the term pollution legal liability insurance. This is actually the wording we majorly use for this product. So there are different terms used by various parties in different countries. So please do not get confused in case you have heard other terms used for this product, as there's no official determination by an authority or something similar. Yeah, starting with the introduction. Before we dive into the topics deeply, please note that once we talk about environmental exposures in this presentation, we primarily focus on historical pollution events. We do not focus on potential future or new exposures, as this does more correspond to an operational risk. On this introduction slide, we see 4 different topics showing why environmental risks are relevant in the course of a M&A transaction. The first topic is uncertainty, which applies in the specific circumstance of a transaction, right? So we see the 2 factors that determine risk, which is on one hand the probability and on the other hand the impact relating to the cost of the worst case scenario. So both factors of influence cause uncertainty on the buyer side, mainly due to the limited knowledge of historical events and historical business operations. So basically, generally, the risk is as it is, right? And it does not change just because the circumstance of a transaction. But the main point here is the information asymmetry between seller and buyer. Because the seller probably knows the assets as well as the environment impacting factors for years, while the buyer has to rely on probably limited information. Second point here is obstacles, which kind of derives from uncertainty. So due to uncertainty, various obstacles can occur. Caused by the limited information, we may have an incalculability that impacts the financial planning, leading to exposures on the balance sheet. So again, the circumstance of not knowing potential impacts on the financials may be worse than knowing that financials will be impacted by a certain amount. Further, in case environmental exposure is known or expected, there can also be the obstacle of differing risk assessments between seller and buyer. Considering that the assessment of potential pollution liabilities can differ strongly. Depending on the extent of risk assessment deviation, this can even lead to significant problems during the transaction or during purchase agreement negotiations. So these obstacles can even lead to deal breakers. Actually, we have been involved in transactions where environmental issues were endangering the whole transaction. And this was rather related to the fact that there wasn't exposure in general, but more to the fact that different opinions and too much uncertainty led to excessively divergent negotiation positions. So the third point as a generic theme here is relevance. As we all know from our personal experience, environmental protection and climate change are one of the most important megatrends in these times. We have an enormous public focus on this topic, leading to increasing regulatory prescriptions by authorities, but also to an increased focus and to a certain extent also to social pressure on environmental protection. As a proof of this, the Global Risks Report 2020, which is published by the World Economic Forum with support from Marsh, this report contained a comprehensive survey showing that environmental concerns are among the top long-term risks and even the #1 concern in terms of probability. So in general, we can expect that restrictiveness around protection measures and activities that can endanger the environment will rather increase in the future, whatever this means in terms of hard facts, like potential future changes in law or impact on certain threshold values or something like that. The last point here on this slide refers to the different industries that majorly have issues on environmental topics during transaction and therefore may benefit most from a risk transfer instrument. So literally, it's any manufacturing business, as theoretically any small oil pipeline or the emission of pollutants during the production process can cause issues. Yeah? However, obviously, risks increase in certain industries like chemical, pharma, etc. Second point is construction projects, which can be on one hand either greenfield projects, but on the other hand, this can also relate to a new building project, respectively the expansion of the company side. Yeah? Considering that processing or impacting of land and soil can always release or trigger historical contamination. Real estate is always exposed to historical contamination risks as well, yeah? Especially once we talk about objects with a long history or objects located closely to sensitive environment or groundwater or something like that. The energy sector may be exposed too, yeah, given its potential impact on the environment, meaning not just obvious assets like power plants, but also renewable energy assets can endanger its surrounding environment. And last but not least, the land and property development sector, referring majorly to greenfield projects, which obviously have an exposure due to uncertainty and lack of information about conditions in land and soil. So after the brief introduction, we want to start with the determination of environmental risks. Yeah? What does it mean? What does it comprise? What do we understand under environmental risks, and how can claims occur? On this overview, you can see here, we want to keep it quite simple. Yeah? So there are 3 gray boxes showing the fundamental categories that can lead to environmental liability claims. Yeah? The boxes also show kind of the legal basis, respectively, the claimant, as we differentiate among private and public law. On the left bottom box, you see soil, surface, and groundwater, which can be affected by pollution. Yeah? Those claims refer to public law, considering that an authority or environmental agency would claim damages to the soil and groundwater. In that case, remediation or cleanup orders for soil, surface, groundwater are applicable to any site that requires an environmental permit and is controlled by environmental agencies. So giving you an example, imagine there's a manufacturing company responsible for soil pollution, which then leaches into the groundwater. For example, due to lacking pipelines, historical land use, or poor material or waste storage. Yeah? And this pollution then results into contamination that exceeds certain threshold values, as, for example, a contamination level could lead to human health risk. Yeah? And therefore, our authority requires the company to clean up the contamination. So yeah, I would assume that this is the most obvious scenario that appears to one when thinking of pollution scenarios. The second area you can see here in the middle is the biodiversity, which majorly includes protected habitats, flora, and wildlife. So this does also refer to public law according to the European Union Environmental Liability Directive, which prescribes the prevention of remedying of environmental damages. So literally it's a liability for damages to the biodiversity, which also includes water and soil. So having another example here, imagine that there's a company, even with permitted process wastewater, discharging the process wastewater directly into surface water, which then leads to destruction of aquatic biodiversity, which then is pursued by an authority requiring the company responsible for the process wastewater to restore the original condition of the aquatic biodiversity. The third area is potentially not that obvious. Yeah? It relates to third-party claims in the course of property damages and personal injuries based on legal liability under private law, yeah? By the release of hazardous substances, contaminants, or pollutant. An example here would be an unknown long-term diseases to residents, for example, caused by non-identified contaminants released in the groundwater, which is then used by private wells. So in case third-party property gets damaged, or humans such as residents get affected by the release of hazardous substances, that type of damage does also refer to environmental exposure, and I think that's important to keep in mind, as an environmental risk does not just relate to damages of the natural environment like soil and water, etc., but also to human health in case it's impacted by pollution. Another distinguishing characteristic is whether the contamination occurs on or off-site. While third-party claims and majorly biodiversity claims are majorly off-site risks, soil and groundwater contamination can be both on and off-site, taking into account that on-site risks do rather refer to known damage instead of a third-party liability risk. After we've defined the different types of environmental exposures on this slide, we want to highlight the different time considerations. Actually, this is a major factor that impacts the characteristic of environmental exposures or risks. As you can see at the top, there's a timeline with different events and points of time representing the different development stages of an environmental damage. So the time intervals between the different events can differ strongly depending on the individual incident. This timeline is not directly linked to insurance matters, but should just show that environmental damages can develop with different stages. So it starts with an initial casual event that is the basis for further development, but this does not necessarily mean that we automatically have a damage. For example, this can be the release of pollutants, which however may not be harmful or is not damaging any other object or subject. The next point here is the first time damage, or respectively the first time legal infringement. So here we have the effect that a pollutant is causing a damage. This can be simultaneously with the occurrence of the casual event, but in case of a gradual development, this can also be at a later point of time. And even if we have a damage, this does not mean that anybody is aware of it. Following that, the third point shows that any party becomes aware of the damage. But still, as you can see, another time gap can appear in case a third party is aware of the claim, although the polluter himself is not, lasting as long as the polluter finally becomes aware of the damage he has caused. And subject to the contamination scenario, this can be quite a considerable period of time. This brief graphic shall just show that environmental contaminations and damages can develop over a long period of time until the polluter obtains knowledge over the claim. And as you can see, that there are scenarios even with a predominant probability where there is a certain period of time between the casual event and the polluter receiving knowledge about the damage he has caused. And that is something we would then call a long tail risk. And in case a polluter caused a pollution condition or by biodiversity impact, but the polluter himself is not aware of it, either because the emission is not critical yet, not known yet, or the polluter is just not identified yet, we then talk about historical pollution. From a polluter perspective, these pollution conditions are based on two possible scenarios. Either the incident or the pollution condition is unknown, That's the one scenario. Or the other scenario would be that the condition is identified or presumed, while the pollution conditions are below remediation thresholds. So we would have received a contamination level that not received a contamination level that would require any actions and therefore is not a damage. Historical pollution is mostly linked to long-tail risks, yeah. And at the bottom of the slide, we see, or we have determined, the two basic categories of how such claim can develop. Not listed, but also a scenario would be a sudden and accidental incident, yeah, meaning a fortuitous incident based on which a damage develops immediately. And these incidents would generally become known directly, meaning that we have no time gap and therefore no long tail risk, and therefore it's not listed here. The first actual long tail risk you can see is gradual pollution, yeah, which refers to a fortuitous incident due to which a damage or claim develops gradual in time. Yeah? And the trigger here is an incident and gradual development. So it does not just appear from normal operation, but there has to be an incident. The second long tail risk is chronic pollution, which refers to chronic and incremental pollution development. Yeah? So here we have the case that no certain incident or accident had occurred, but just due to normal operation over years or decades, the level of contamination increases in time. Yeah? In this scenario, you should consider the relatively low environmental protection requirements in former times. So these conditions can be caused by operations that were authorized or not monitored in the past. So we have existing pollution conditions which are already in the soil but have not led to cleanup requirements yet. And in time, the emissions develop chronically and can add up to a critical pollution conditions up to a point where it reaches a level that requires action, meaning that leads to a claim. As a last comment on time considerations on long-tail risks, the most obvious type of claims may be contaminations in soil and water, which can develop over time. However, long-term bodily injuries should not be underestimated. Yeah? So long-term bodily injuries mean that released contaminants affect humans, causing chronic diseases which develop over a long period of time. So, for example, if we have a manufacturing site and various residents living next to the site, and if then the manufacturing site releases contaminants in the groundwater used by private wells, the residents may get diseases caused by these emissions. And in this context, it should be considered that the diseases may develop over a very long time period, meaning that a claim may be made against the polluter of the manufacturing site several years after the actual emission of the pollutants. Yeah, coming to the M&A context. After we've seen the definitions and challenges of environmental risks in general, we now want to put this into the context of a M&A transaction. Some of these points here were already mentioned at the beginning of this presentation, so we want to go quickly over these points, especially uncertainty, which we have discussed at the beginning. Nonetheless, a transaction leads to increased uncertainty, especially against the background of pollution-related long-tail risks. Due to the information asymmetry, the buyer of an asset has no or very limited knowledge of historical events, site utilization, soil and groundwater conditions. And even if he receives information during the due diligence process, this is often quite limited to a very short time period, which may be insufficient if industrial use has been conducted for several decades on this ground. Yeah? considering that the uncertainty increases with long past durations, and the significant long tail exposure increases over time. Also, as mentioned before, the information deficit leads to limited knowledge about probability and monetary impact of pollution conditions, even though there have environmental experts been involved. The second point you see on the slide is liability. We will not get deep into that topic, but there's a general principle stating that the polluter pays. However, if the polluter cannot be found, the secondary port of call is usually the property owner. So depending on the transaction form, if it's asset deal, share deal, carve out, as well as depending on the type of asset being acquired, the extent of legal liability may vary. However, a certain degree of exposure will usually flip always to the buyer. Yeah? Although apart from legal liability, there's obviously the possibility that liability arrangements can be made in a purchase agreement. So this should, of course, always be taken into account as the risk can change through individual liability allocations. The last topic we have here is the insufficient cover of insurance policies in terms of historical pollution conditions, referring to conventional or traditional insurance policies. Under the first point you see here, we would see traditional insurance policies such as general liability or even environmental liability insurance, which can be taken out by the company in the course of its general commercial insurances. We have not enough time to discuss it here in detail, but almost every conventional commercial insurance policy does not adequately cover historical pollution events. Despite that, the scope of cover varies among different countries and jurisdictions. So to make it simple, commercial insurances are often not appropriate to cover long-term environmental risks, but in regard to historical contamination, they are definitely not an appropriate risk transfer instrument. So even if conventional liability liability or environmental liability policies of a target company remain in force in the course of a share deal, historical pollution events are still insufficiently covered. Further to that, challenges can increase once we have an asset deal or a carve-out transaction, considering that the conventional policies generally cease to provide cover for the target after the transaction. Last point here is warranty and indemnity insurance. Also, just a quick comment in regard to environmental exposures. W&I insurance cover is generally limited to compliance with environmental legislation and environmental permits, if cover is provided in that respect at all. So it covers compliance with permits, which does not mean that historical contamination is covered, considering that claims can occur even though permit requirements are fulfilled. Requirements of insurance in M&A transactions. This brief overview illustrates who can have interest in such insurance, and besides summarizes the main motives again. On the left side, we see 4 different parties that can have an interest in a transfer of environmental risks. First of all, obviously the buyer, who is likely taking over the environmental liability exposure, but also the seller can have an interest in a risk transfer. So either in case he retains a certain proportion of the risk, or in addition to that, he's also increasing the attractiveness of the target due to the external risk transfer, and therefore may be in a position to negotiate less risk discount, respectively a higher purchase price. The third group is all kind of debt providers, banks, lenders, etc. So it could be the case that the loan is completely at risk once the environmental risk is too high, and lenders will refuse credit in general. And insurance policy then could enable the entire transaction, or alternatively, the procurement of such environmental insurance can increase collaterals, having a positive impact on the borrower's creditworthiness and consequently on the credit costs. The last group of interests is developers who can increase or even obtain at all the calculability of land development costs due to the exchange of risk-related uncertain cash flow against a fixed premium. On the right side, you see a summary before we discuss the insurance product itself. We see the main objectives of taking out pollution legal liability insurance in the course of a transaction. So the objective is to obtain protection against environmental risks for historical pollution without time limitation, with respect to backwards insurance coverage, meaning that we will not have to care about the point of time when the pollution has commenced. We also want no limitation or specific stipulations on how pollution has occurred and developed. So we do not want to care if pollution, for example, developed gradual or chronic. And we also do not want to care about certain claimant groups, meaning that we want protection for public and private law claims. And last but not least, we also do not want to care whether damages occur on our own or on third-party property. And to achieve these objectives, pollution legal liability can be an appropriate risk transfer instrument. And Christoph, I would now hand over to you so you can explain the product underwriting process, etc.
Okay, thanks a lot, Marius, for this introduction. So, as you have seen, there are a lot of issues. The item is not as easy as that, and now there's a good news. There is a solution. So this solution I want to discuss with you within some slides to bring to go a little bit in detail within some points which have been mentioned by Marius. So the first issue, just to resume, is, well, within that deals, if we are speaking about past liabilities, there is an issue of timing. There's liability with respect to long-term going backwards, sometimes 100 years and more than 100 years in transactions. And it's quite logical that within such a long time frame, there's loss of knowledge and there's loss of information. So we can't really know, as due diligent we are, what has happened in all of that past. And there's, of course, uncertainty. And the looking forward, we have that development of that pollution within a medium which is not directly accessible, the groundwater and soil, and which leads to the uncertainty of discovering what will happen. Giving that in a context that, as Marius said, ongoing coverage with respect to environmental does not cover this exposure, and that law is frequently changing and increasing, that's a real issue. So just to go back to two items already developed by Marius, but as it's specific insurance language, it has to be accepted as that. These are really defined terms within our handling of the issues and not necessarily taken over within the Wikipedia definitions or others. So, unknown, everything which has not been detected or identified below remediation or action levels. And there are no there's no specific identification how the pollution incident or the pollution conditions have happened in the past, because the more we go back to the past, the less we know how the things might have been happened. And if we go 70, 80 years back, there hasn't even been environmental legislation. So there's no issue of saying being compliant with environmental legislation. The people have done as at that time they believed it was good to do. And the practices of that time are far away from what we consider by today being compliant in environmental management. So that's really, it's not by failing with something they should have done. There was not that issue at that time. And so with the contrary of unknown pollution, and we will go back through that with several slides, is known. That's really, this is a basic known, and known for our language means identified with respect to action levels. That's really the action level by today. That's the important one. If it's an action level by tomorrow, that couldn't be anticipated. Just this is part of the insurance. Please, can we go, Marius? So the different exposures that we see and that we address through environmental insurance are the following. We are speaking about as soil and groundwater pollution, and this may be triggered specifically by governmental orders. So this would be public law, and there may be additional private law claims. So what could be covered, or what are exposures, is remediation, cleanup of contaminated soil and groundwater, as well on-site as off-site, as far as there is a remediation order, and as it's imposed, specifically imposed. There's a gray area. There may be also third parties suffering from polluted soil and groundwaters in gardens or houses that are close to, and we would classify that within the third party claims issue. So for our purpose, soil and groundwater pollution are public law claims. Then biodiversity damages, this is just starting because the law is not so as old as that. 2007, that the biodiversity directive has been installed, and we have many local laws now presiding that and making this issue harder and harder. And this is wider than just pollution. This is just a damage caused to natural areas on a longer term tail. I think that's a new thing, as we didn't consider the global structure of nature on a very long term. And this liability appears to be, in newer claims, one of the most costly one. It's in fact what we see very often, up to 30 to 50 times costlier to restore pure environmental than to indemnify for traditional bodily injury and property damage. The thing is that with respect to international portfolios, in this slide you see it's in accordance with the European Environmental Directive, but with respect to international portfolios, we will also extend to similar law in other legislation, as you will see, the China, Canada, Mexico, Argentina. There are so many countries in the world implementing biodiversity, which really becomes the second issue in the world besides climate change, and so therefore becomes a worldwide issue. So the policies would cover worldwide in with respect to biodiversity. Also there, it's typically imposed by supervisory authorities, but there are also other laws now allowing third parties, NGOs, to claim. Then we have the typical third-party claims for bodily injury, property damage, as Mario said, sometimes with long-term tails, specifically if in the past there has been dust exposure, asbestos or dioxin levels. There are so many levels that make the claim happen through different receptors, sometimes animals, etc., and people drinking milk, which makes that the claim or that the incident will happen with a lot of delay and is difficultly anticipable. Additionally, this type of coverage would take all legal costs, would take the investigation costs that would be necessary to identify the loss, and the loss mitigation and rescue costs. These are the additional ones, but typically needed or applying in the case there is a claim. And optionally, there are available business interruption cost and coverage for waste liability, but this has to be documented where the different waste has been put in the past. So sometimes there are coverage available with different levels of underwriting information which are needed, and there we go to the next step: how to underwrite that, how to integrate that in a process. And the first thing here I would like to emphasize on, the easiest to integrate that that solution in an M&A process is to anticipate that from the very beginning, because sometimes it takes time to gather the information, to understand that, to reflect that, to work that through with the underwriters, with the insurance markets, and make sure that we have a complete back-to-back cover. So ideally, there, of course, we would expect, please don't look right now at the picture. We will see that afterwards. We won't make it complicated. Want to go that in an easy way. The important thing is that we need to offer to the underwriting markets all positive knowledge we have, because this knowledge will figure as something we delivered to the insurance markets and for which we will be covered. This knowledge will be the positive knowledge even of insurance incidents that will be covered, as the cover further on, as we will see, will be written as an insurance covering everything but, and the but will be something which has been identified within the delivered documents. So if we don't deliver information, we create a gray area afterwards if we have a claim to document that we informed the insurer about the risk correctly. So this is really the fundamental part. If it's possible to get that within a professional report, as we would call the phase 1 report. Phase 1 is a historical study which additionally superposes the environmental sensibility of a site. What does it say? All knowledge of historical leaches, of historical incidents, on which are superposed the sensibility of groundwater, of surroundings, of potential claimant parties around the site. If the phase 1 would suggest that there should be groundwater and soil further investigations by analysis, and as an absolute need, then probably we should foresee that as if it's a technical identified gray area, the risk can be covered, but would bear potentially exclusions that later we don't want to have. So this is a way to approach it. The phase one is very quickly to put in place, and this would identify if we need something else. So within a process, this is of big help to process like this, to get certainty of what we can cover at the end and what potentially we might not be able to cover. Now, in some cases, we don't have phase one. We just have distinct reports, etc. And even in that case, it is possible to place insurance. In that case, just there's a lot more work to do for the broker, who has to do a kind of phase one by putting this information together. And sometimes also it's a little bit of more work for the underwriter, who has to understand that everything has not been put together in a comprehensive way. But if we find the ends, if we find the information, then still it's possible. Typically, what is needed is groundwater analysis if this is happening, if there are groundwater wells, and statement of authorities if applicable. The SPA if it's happening. Now, just to this picture, you see how typically it's happened. The site is mentioned by the site limits, and typically the soil, which is just above the groundwater layer, which may be more or less close to the site surface. In red, you have identified known risk, what we would call known risk. So this has been identified, as you see, within the wells. They have digged it up and they came to that pollution. So it has been analyzed and identified. Typically, therefore, this groundwater analysis is so important. Within the sense of the groundwater flow, which you see below, the analysis likes to look for an up gradient and a down gradient analysis. So all pollutants which have migrated from the site into the groundwater could be analyzed in a differential way. And on this base, an insurer typically would give his offer and cover the unknown risk. But as you see, there are pollutants that have not necessarily already reached the groundwater, or which are already offside of the discussed area of analysis. So this is the technical uncertainty. Even if you are completely compliant, even if you have the best environmental auditor, which you have to accept and which make that the technical assessment, as well as it may be, bears uncertainty. So maybe we can go to the next one. This is just to show you in a very practical way how a technical advisor, an auditor, an environmental auditor would put together for each insurance condition, which is potentially or identified as a known condition, how this would be assessed. So potentially, a potential pollution condition comes from the site history. There has been let's say there has been a gasoil station for 100 years. An auditor would assume, if this has never been assessed, that around that gasoil station there are hydrocarbons, because there is this chronic fact each time that you use the gasoil station that something will drop besides. So this would be identified as a potential risk. This is you don't see it in a very big way, but where you have this red signature. These are PAOC, potential areas of concern. And you see here, most of these are potential. So they have not identified they are coming from the historical analysis. And there's only one which is known, which has been identified within the audits and which is above remediation measures. So this is the way everything is put together. And then auditors, they say why they assess that, where they assess that. And typically they put in case a base case and a high case. A base case is it will work in the reasonable scenario. And so yes, you already switched that. We see that on the graphic down right. The base case is the best cost scenario, and the high case is what it may cost in a high case. It's always within this range that a technical auditor will analyze risks. And if we transpose that to the left side at the down, you will say the base case and the high case expressed in amounts which are corresponding to this typical assay. And additionally, for insurance purposes, we put the catastrophic risk on that, which is a risk of third parties claiming, which is not assessed within environmental audits. From that, you can see that between the base case and the high case or catastrophic risk, there's a big difference based on the same analysis, on the same audit. And here is now how it happens. The seller typically is very confident with this situation because he's used to it. He will consider that the base case is already the worst case scenario as he's used to it. The buyer and his banks, they will consider the risk as not knowing it as very risky and probably assess that around the catastrophic risk. So you have one party sure that the risk shouldn't be higher, as we have the examples here, than 2.2, and the others that it should at least be 17.5 million. How to arrange that? Well, this is now where insurance can facilitate and somehow re-engineer the risk and put an area which typically is quite close to the base case and insure from that area on the rest of the risk. So for what have you done? You have decreased the area of discussion between 2.2 and 17 million to an area between 2.2 and 2.7, which becomes much more easier to discuss and to negotiate, adding an insurance premium on that. But what we will see, this is something which manages to be less costly. Please, the next, and then we just resume. So premium is typically found to be in levels of 1.5 to 4% of the insured capacity, depending on risk, number of sites and capacities. There's enough of capacity, 250 million. The policy may cover up to 10 years. And the self-insured retention is typically around 100,000 euros per incident. Now, the strategic points to look after is voluntary site closure. These are exclusions that are not, that would apply if not something specifically is foreseen, and because these are changes of the nature of risk. Voluntary site investigation after the insurance binding, cost resulting from future underground or development works, and of course the identified pre-existing conditions which are namely excluded, and site development to a more sensible use which would completely change the nature of the risk. Next.
Yeah, Christoph, I think there is still the summary page, but I think we can skip that.
Okay.
and see if there are any questions from the audience for the last 5 minutes.
Sorry for the fast 5 minutes only left. Yeah, please feel free to ask any questions, because things are not necessarily as evident as that.
Marius, there are no questions. Maybe you want to go to the last slide, last page then?
Sure, yeah. So this was just a slide with application examples. Christoph, if you want to go ahead.
So just to see if there's a manufacturing business, for example, in the car construction area. So say you have soil contamination, which is identified, but in such levels that it doesn't require there's no level at all that requires any intervention, but the risk of dispersion, of future migration of ancient contamination, as we have seen in the before slide, is of course existing due to the site assessment and the historics. So this is something which can easily be covered as far as we don't anticipate any change in use, no site closure, etc. If there is site closure or change in construction, then we have to anticipate that and really identify risks. And specifically in the SPA, these are things that should be excluded from the seller side and put to the buyer side, because otherwise it can never be managed in the future, this part of exclusion, and with respect to the benefit, the future benefit of the site. We may have pollution conditions identified which don't require remediation by today, as the pollution has been considered acceptable by governmental authorities. So therefore, this, with respect to these items, that's of course coverable. And the important thing is that insurers today would cover change in law, which would give us what nobody could give us other, the possibility to make sure on a long-term term, just up to a 10-year term, that our accountancy model, that our balance sheet will be protected, and even if law changes. And the last sample was what we have used in the first example. We have different sites worldwide applying different local legislations, and the policy would indemnify. Typically, if we are in legislations where we cannot directly indemnify, would indemnify a mother, but would apply local laws with respect to environmental and consider the local interest as an insured interest under the master policy. So this is something which works even for worldwide portfolios.
So I think we are at the end of the webinar. Thank you very much, Christoph. Thank you very much, Marius. It was really very, very interesting what you have discussed about. I think this is now a good break for the next couple of days. On the 8th of October, we do have the next webinar, Cash Release Insurance. Thanks for your participation outside. I think you should participate also on the 8th of October and the following dates. Very interesting topics still outstanding. And I wish you a good afternoon and a good evening.